Welcome back, folks. We are looking at a daily chart of gold, and now that we've moved significantly lower, I can talk about the entry. Okay, the reason I don't do this in advance is because I'm not providing signals. Okay, I try to do as much as I can to help you understand price action. Okay, but I can't provide you in advance exactly where to enter and exit. Right, that is against the values of this channel. This channel is all about education, teaching you how to read price. Okay, so early on in the week, I think it was Monday morning, okay, I gave you a analysis of where the market would be heading, okay, and I said it'll be going down to the weekly imbalance, which is a pink shaded area, okay. We're almost there. If I go into a weekly chart, that was the forecast down to there, okay, and that was over 300 pips, okay. I started up here when I said we've got an engulfment of this up candle. That's where that analysis video started. So from there to down here is the direction that I forecasted in advance before we started to go down any of this, okay? And that's around about, well, that's over 300 pips, as I said in the video, okay? So now that we're all the way down there, I can talk about the entries because as you know, well, you may not know, but you could obviously assume that I've taken that trade, okay? Why wouldn't I when I forecasted that well in advance and proven my ability to reprice with all of my live trades and previous analysis videos, okay? So the way that I traded this is I took this wick, okay? Whoops, let me go to square. Okay, that is the wick that I've taken. And that is basically a gap, right? We consider these wicks where the body, okay, is small and we have a large wick. We consider that wick just like any other gap. And what I do, right, when I wanted to enter a short position, okay, I want to take the midpoint of that wick, okay, and use that as my potential level for the entry. So that's what I'm going to now dig down into and talk about further. And even this morning in the video that I posted, I mentioned the 4 hourly equal lows, okay, that we have now just tapped down into, okay, as well as the daily, right, equal lows that we've tapped into, and the weekly fair value gap that we still need to tap into, but we're on our way, okay. So on the 4 hourly chart this morning, I also mentioned that, you know, I indicated to you and highlighted these 2 up candles as the bearish order block, and you can see we've tapped into that, okay, and reacted from that, which is anticipated, okay. So you had everything you needed to understand where repricing lower could come from, okay. I'm going to give you another level of confluence that you can use off this daily chart, okay, and that is to take the midpoint of this wick, okay. So we'll do that. We'll take the midpoint of this wick. Let me just make sure the color's right on that, which is that yellow line. You can see today we've tapped up into there. Notice also this candle, day before, we've come down and just basically engineered liquidity, okay? And now we've gone straight through there, which is anticipated as well, okay? Because that's what generates these equal lows, okay, for this market to come down into, okay? Now I'm going to drop down into that 4 hourly chart, okay? And I want you to look at this yellow line. See how well that aligns with the 2 up candles, which is your bearish order block, okay, that we have moved down from, right, in Tuesday's trading, and we've come back up into fill up this fair value gap, right? So this is your, again, another break of structure, your equal lows here, okay. We've still got targets below, right? So we're still bearish, right, as I've indicated in my video this morning and Monday morning analysis video. So this is all coming back up into filling this gap, okay, this bearish order block, and this is your mitigation block, okay, which is this last down candle, okay, in this swing low. It's a mitigation block because we haven't taken a higher, we haven't gone higher, okay. And entry is anywhere back up into these 2 up candles, right? But with precision, you've got a midpoint here of the wick that I showed you on the daily chart. So you've got a lot of confluence there, okay. If we drop into an hourly chart, you can see that we're moving up, and right at the open of London, we have an engulfment, okay. This is that 3-bar pattern, okay, where this middle candle takes liquidity, and then we have an engulfment. On the hourly chart, right, we could enter at the end of that, which is basically open at 2 a.m., second hour, okay, and that's also coming into its own bearish order blocks, okay, and this, so as we've gone down, okay, we could have entered at the open of that 2 a.m. candle, which is our 3-bar reversal pattern after this engulfment of the first bar, okay. Again, you have confluences. You're also coming to, as we're coming up, we're coming to these 3 up candles on the hourly chart, okay, that's our bearish order block, okay. and we've got that yellow line, which is the midpoint from the daily chart, the wick. So time and price is aligning here, just like on the 4 hourly chart. Okay, we've also got this price point, which is your order block, bearish order block, mitigation block, and this yellow line, the midpoint of that wick on the daily chart. Okay, again, this is all pushing up. Asia provides that initial manipulation moving up. Okay, now if we jump down to a 15-minute chart, we can see that we have this initial pump for the dump. We've got the midpoint line, okay, and we have the start of London, right? So this is all from previous New York session. Pump, 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 pump for the dump, okay? So a lot of alignment on 4 hour, on 1 hour, time and price, okay? We have, this is your swing low, okay? This is the swing low. Doesn't really make a higher high, but that's our bearish order block. Okay, we come down, we engulf that, okay? And this candle moves up into there. That's that 2 a.m. candle. Again, we have this midpoint of the daily, okay, which is most important. That's kind of where we know price, any kind of reversal from that point is what we're looking for. Once we have this engulfment, right? This is the 1:45 a.m. to 2 a.m. candle. As soon as we have that engulfment of this entire structure, we know that the longs are trapped, right? Longs are trapped. Engulfment, that entire structure above, traps all the longs at that breakout, okay? We have other confluences like the hourly, okay, turning around, 4 hourly bearish order blocks, this midpoint on the daily chart. All of those things are helping us, okay, telling us, providing us footprints of what the market makers are doing. And we already have in the back of our minds from analysis at a high time frame that I've provided for you last Monday morning and earlier today, that we have on a high time frame bearish signatures, okay? What's going on with my trading view here? Let me just pause the recording while that's loading. There we go. So even on this daily chart, we have this up candle, which is our bearish order block once we trade below the open, and that the market is pushing up into, okay? These are signatures that I pointed out to you at the start of the week in my analysis video, as well as this morning, and I think probably during the week as well, indicating that I still was bearish. My bias had not changed from my initial analysis video, and it never does. When I do those initial weekly analysis videos, they are very accurate. That's not an indication for you to now start risking capital based on that analysis. This is all about you learning price action, okay? So if you don't go back and study what I've just shown you, you won't be able to do this on your own, okay? Go back, look at the daily chart, go back and watch the video that I posted Monday morning where I talk about the directional bias. None of this had occurred. That video was posted when Monday hadn't even opened, early morning, right? At that time, we only had this candle on the chart. All of this was forecasted in advance, okay? Go and watch that video, then bring it up on your own charts and look at what I have pointed out. Look at the weekly, right? We've got this move down, and I'm still looking for movement into this, potentially down to here, okay? Doesn't have to come here, as I've said. Go watch the video, right? Just looking for it to come down to here, 2470. We're already there. You know, I've already closed my position here. I've already closed out. As soon as we've broken today's low, not today's low, yesterday's low, I've closed all my positions, okay, for the short. This move down to yesterday's low, okay, Tuesday's low. That's it, right down there. That's enough for me, right? I've taken hundreds of pips with size, okay? That's not a trade that I'm going to be journaling because there's just so much money involved in that. It just doesn't make sense. No one's going to be able to relate to it. I've already given it to you in advance last Monday, okay? So why wouldn't I trade that, right? So that's and I've taken scalp trades along the way, long and short, okay? So in this video, I wanted to teach you how to use the wicks, and I've been saying this for many of my videos. 4 hourly wicks and daily wicks and weekly wicks are all gaps. When there's long, large wicks, look at the midpoints because they are important levels that will hold. Okay, they will be the true support and resistance levels. You've got to have it on your charts. So as I said, if you don't go back now, look at the daily chart, watch my video, look at the weekly chart, look at the 4 hourly chart, okay, how it has evolved over time, okay. Have a look at the hourly chart. I haven't spoken about the hourly chart, but that's for you to now study, okay. And look at it on your own charts after watching the videos. Watch this morning's analysis video, okay, where I had said, let me bring it up, right, this video here, this morning, I posted this. And look at the title, big move coming, right? Even the the snapshot there shows you those equal lows on the 4 hourly chart, right? I want to say the 4 hourly chart looks like, because there's the bearish order box there. Okay, so go back, watch that video, because you need to go back and learn what was it that I said. Look at it on your charts, but most importantly, you want to go back and watch the Monday morning video where I did this entire analysis for you. Okay, so I hope this video is useful. I encourage you to go back and study the charts, go back and watch the previous videos where I've done this analysis, right, for the week coming, which is now this week, obviously, and the video I did this morning, which kind of reinforced the message. Okay, we still have inefficiencies above. So at some point, once we balance all this down the bottom, then this is what I'm going to be looking for, right, for the market to come back and look at those equal highs above. Okay, so I hope this video is useful. I will now talk with you in a future video.